Gautam Shah joining in now. He's founder Goldilocks Global Research. Gautam, great to have you on the show as always, and superb time to speak with you. No one quite understands what's happening with the index. On the face of it, nothing too much to worry about. No major clouds on the horizon. Technically, do you think that there's some fatigue setting in as far as the Nifty is concerned?
Good morning. I think no news is good news, and confusion is great for any bull market. And I think because people are not being able to make sense of what's been happening, it's actually a good place to be in because that fuels the bull market. If you look at the last 10 days, despite all the happenings, we've been in this 500-point band on the Nifty, which is great news, 24,500, 25,000. But let's not forget that we've had a fabulous run in the last 2.5 months. And if after such a big rally, the market is not able to lose 2-3%, I think that's quite commendable. I think we are still inherently strong. The market has been displaying bull market characteristics. The momentum is excellent. Participation is great. A sector after another seems to be coming back. And if at the starting of the year, somebody told you that there's going to be an economic slowdown, there's going to be FI selling, Mr. Trump is going to take on the world, and there's going to be geopolitics, would you expect the Nifty close to 25,000? The answer would have been no. But that's what liquidity can do. And I think I saw the same thing in 2003, 2008 bull market, and I'm seeing the same thing again. Last time it was foreign, this time it is domestic. So I do believe that the markets are headed higher. Our working target is 25,600 and eventually lifetime highs. So stay committed and ride the trend.
This comes, Gautam, in the current calendar, you think? Good morning, of course.
High probability, Neeraj, because the market does not waste time anymore. Gone are the days where you wasted time to go down or wasted time to go up. I think we are at 25,000. Who would have imagined that you are 4% away from lifetime highs? The bank Nifty is already at lifetime highs. So it's a good place to be in. I wouldn't be surprised that this year itself, sometime this calendar itself, we should be at new lifetime highs. Because as I said, we've gone through a lot of stress locally and globally. How much worse can it get in terms of news flow? We already got what we could have got.
Wow. Okay. Gautam, so the street, I mean, fundamentally, right, people are saying, let's not bet on large cap versus mid caps versus small caps. Let's bet on where the growth is. But for sake of charts and simplicity for understanding for our viewers, I'm trying to understand from you. If the Nifty is not unfavorably placed, could it be that the Nifty does this 1,000-point jig, and whenever point of time it does, but a lot of broader market stocks might have exaggerated moves?
Absolutely. That's exactly the view that we have, because I think in percentage terms, the Nifty is not going to do anything special. Even if it were to move to lifetime highs, that's a 5-7% move. I mean, at best, you could see a 10% move on the Nifty from current levels. I'm not looking at any numbers beyond that. But I think the wave of outperformance in the small caps and mid caps, which started in the COVID lows, seems to have, found strength once again. And after this 6-month cleanup that you saw in the broader markets, you are seeing quality make a very strong comeback in the mid caps and small caps. So I do believe that the next 6 to 9 months is all about mid caps and small caps, and that's where serious alpha will be created. The Nifty will do well. It will keep you pepped up. It will keep you excited on the screen, but I don't think the returns are going to be in the Nifty and the Nifty stocks.
Where do you think the push is coming from, Gautam? Do you think that you will see banks make a comeback, have been quiet on the sidelines? A lot of people we're talking to say consumption is a story that's yet to play out. Is it discretionary consumption? What are those pockets that you are identifying right now?
Well, consumption remains an underperformer, and there are still questions about the Indian economy making a comeback and whether it can actually sustain. So you will need to see a couple of quarters. I mean, the fact that the paints industry has still not able to come back, and we keep talking about Asian Paints and many other stocks, is an indication that you don't want to go the consumption way. I think right now is about financial services. I think every time I've been on your channel or at an event, in Bombay, I think the view was very clear that financial services is the way forward across the board. So banks, NBFCs, insurance companies, housing finance companies, all look excellent. And my working target on the bank Nifty is about 60,000. And it's coming out of almost 2 weeks of consolidation for the bank Nifty. So I think I'm still betting on the top NBFCs and the top banks. I think alpha will be generated there. 2 other pockets that we like and we feel should do exceedingly well
Oops, I think
in the next 6 months is metals and real estate. And please realize a lot of people, are trying to pick stocks which have already done well in the last 2 years. But I think there will be new leaders emerging in the next 6 to 12 months. Metals, I'm looking at a 15% move from here on the index. Real estate, I'm looking at a 15 to 20% move from current levels. Those are the pockets to bet on.
Wow. So metals, real estate, what about defense? Defense story is done, Gautam?
See, the price action is still very good. I think 15 days back, post the geopolitics, I think a lot of defense stocks ran up quite a bit. Valuations are out of whack. People seem to be chasing them just because of momentum, but I don't think these are good levels to make a commitment into defense. Yes, it might be a good 3 or 5 year story, but risk reward commitments at these prices in defense and railway, I'm not in that camp.
Wow. Okay, Gautam. The one which is facing the conundrum is tech, and the views are divided on the Nasdaq. The views are divided on what Indian IT Pact does as well. I'm guessing you look at both. Could you dwell upon this?
Yes, Neeraj, we now have an official US market product. So we track the US markets very closely on a daily basis. And again, globally also, when I speak to many institutional investors, people are surprised that the Nasdaq is actually within striking distance of lifetime highs. The S&P 500 is, at levels of 5850, and I think looks good for 6150. But I think we still live in a world where Mr. Trump could get up and say that, okay, I want to do this today, and markets will have to react to that. He might roll back it, but that's a different story. But at least you live in that risk of something happening overnight, and that's probably the reason I've been more keen on investing or recommending businesses which have less to do with foreign markets or foreign soil. So that's probably the reason IT is definitely not in favor. IT and pharma, I think I would stay away. They will be market performers, but they will not generate outperformance. Many of the mid-cap IT stocks are very expensive, and large-cap IT cannot run from these levels. So that's probably the reason both these sectors are an avoid. I think it's a wastage of time and opportunity cost to be committing into them.
Okay. Gautam, a word on gold. Can't not talk about that, can we? Because it's had a phenomenal 2025, arguably even 2024. You were right on the button there. Would love to know what from here on.
Well, who would have thought, Neeraj, that gold would double? We always talk about percentage returns, but a $1,700 on gold, I remember 18 months back when we first spoke, tested a level of 3,400. I think it's a little overdone from a short-term perspective. So please do not make fresh commitments at these prices, but hold on, because I think it's a mega trend. If the view is 2 to 3 years, it will do much bigger things and possibly even cross a 4,000. But I think a 7-10% correction is coming. That will be a good time to invest in gold. But the other precious metal where I'm very excited about, as excited as I was about gold 18 months back, is silver. I think it seems to be laying a foundation to a mega uptrend at levels of $30 to $33. There is not much to fall. And I think if all goes as per plan, I think silver can actually give you a 30 to 40% upside from current levels. So that's the next mega trend that we are trying to catch at Goldilocks.
Silver is the next mega trend that you're catching. When you see all of those, and this is very, very popular on social media right now, Gautam, that people have wasted their time in equity, take it back to any kind of a time span, and gold has performed better than equity. What do you think when you see that?
That's true, and I think that's going to be the case for the next 6 to 12 months, because if you're going to compare Nifty returns or Nifty 50 returns versus gold and silver, I think that underperformance of equities over gold and silver will continue. So, I mean, that's the reality. You have to live with it. But if you're in the right mid caps and small caps, I don't think they can compete with, gold and silver, or gold and silver cannot compete with them, because I think the mid cap, small cap story is still very strong. The way auto ancillary stocks are doing well, some of the smaller infrastructure stocks are doing well. I do believe that that's a new mega trend. In fact, PSU as a basket we like, valuations are comfortable. So avoid the top 50, 100 if you want to really create alpha. Stick to quality mid caps and small caps.
What are some of these quality mid-cap and small caps? Because that's when you're looking at, and I'm sure you've looked carefully at what we've seen this result season, and it seems to be a case of extremes. Some extremely good numbers, some extreme howlers. So what are some of those, quality kind of ideas that you have identified, Gautam?
See, for your viewers who don't want to really work too hard and look at stocks and pick stocks on a daily basis, the best thing is to buy an ETF. Because in some sense, when you buy an ETF, the exchange is working for you. You'll always have the right basket of stocks in your portfolio at all times. I've seen this over the last 20 years. So ETF investing, I think, is the future, and I think a lot of investors, passive investors, have realized that. So that's one good way to play the entire basket. You could look at the mid cap, small cap 400 index. I think it has an ETF. It's a good way to play that basket. But if you really want to go stock specific, I think some of the metals PSU, I mean, look at what SAIL has done in the recent past. Look at some of the other capital goods PSUs like BHEL has done in the recent past. Lovely setups, and I think they're going to do bigger things going forward. Look at some of the infrastructure PSUs. I think that's again a good place to be in. Power is a story which is here to stay, if you want to play the India story. So non-PSU and PSU power stocks, I think, are right up there. So I think these are some of the baskets that we like. I don't want to recommend any specific stocks, but these themes, I think, are likely to do really well over the next 6 to 12 months.
Gautam, for pockets which have been promising a turn and not quite happening, I wonder if finally the turn has arrived. So one of those pockets is chemicals, right? Been promising for such a long time. Some of the prices are not quite moving as a pack. Is the bottom getting formed, or is it difficult to call that right now?
See, I've always believed that the market is the best judge of what's really happening fundamentally. And I think after 3 years of underperformance, you're finally seeing some upticks in some of the top chemical stocks. Now, I don't think this underperformance can continue, because when I speak to many of my institutional clients, I think the view is very clear that all this Trump talk is only going to be beneficial for India and for many of the chemical companies out here. And I think I'm seeing the first signs of strength returning in the chemical space. But you still have to be very picky and very choosy. So don't go overboard, but keep a watch. I think the trend will emerge over the next 3 to 6 months. But I think the other two spaces which have been trying to turn around, one is FMCG, which we still do not like. Some stocks might do well, but I don't think it's a preference. But I think auto has finally turned the corner. And I think some of the top auto stocks are likely to deliver supernormal returns. So along with real estate and metals, we also like auto, and just keep a watch on chemicals.
Since you brought that up, tempted to ask you, ITC, there's this big overhang of the institutional sale coming in on ITC consistently. The stock is down today. Now, I remember at 200, when it was a sleeping giant, you were the first ones, probably the only one to say that let's see this moving now. It went up quite substantially. It's again been in a slumber, and now with a negative bias. Does the negative bias continue, Gautam? Would you be short here? Would you be away from it? Or would you be conversely long here?
See, Neeraj, today's financial markets is all about picking the right theme. And if you buy the worst performing stock in the best performing theme, you will still outperform the markets. I think this is what the last 5 years has taught you. So be in the themes which are showing relative strength. FMCG as a basket, I think there are still questions on the economy. Valuations are still, very expensive. And that's the reason I don't think FMCG as a sector will do well. But ITC remains a favorite. I mean, if somebody is having a 2 to 3 year view at levels of 400, 420, you can't go wrong with ITC. So I wouldn't be negative. But then in this market where there are so many opportunities, do I really want to commit big on FMCG and ITC? Maybe the answer is no. So it's really about active and passive. If you're a passive investor, go with it. If you're somebody who's looking at more 3 to 6 months, don't go with it.
Okay, so, so clearly what I can sense is you're not buying this whole FMCG staples theme, consumption will come back story. Same for discretionary. Are you done and dusted with the whole eternal Swiggy madness that we saw a few months ago?
Well, I think Swiggy was a madness, maybe not eternal, because I think it continues to hold that 220, 230 area really well. Swiggy was oversold and marketed aggressively, and we've seen what has happened over the last 6 months. So I think its market is very smart. It knows what to give value and what to not give value. And some of these stocks are still very expensive. So while Eternal has really played out the entire six-bagger story, it might not see serious upside, but I think it's broadly going to be in that band of 200 to 300. But the bigger opportunity is clearly, in some of the other sectors I mentioned. Do not forget valuations. At a 25,000 index, you can't buy a story. You buy a story with relative strength and with good valuations. And that's why I think metals, for me, is on top of the list, because, all three check boxes get ticked.
What about the insurance play? I mean, LIC is booming today. If you look at the numbers, it's not like there were some great fireworks. Maybe not as bad as expected, but that's the pure numbers. Valuations is what has excited most brokerages. On the charts, or how are you looking at LIC and the whole insurance space?
We like it. I think 2.5 years of hard work is now finally paying off. I think some of the top private insurance companies look beautiful on the charts. HDFC Life, ICICI Pru, even an ICICI Lombard, SBI Life, MFSL. Great charts coming out of 2.5 years. And, insurance is a theme which is here to stay when, given the younger generation and their perspective on life and, what insurance is. So I do believe that this is a mega theme for the next 3 years. So I like it. In fact, we've recommended a couple of stocks in the last 1.5 months. And I think this theme is here to stay. And that's probably the reason I keep saying, don't go back to the winners of the last 3 years. They will not deliver great returns when the Nifty next move to lifetime highs. Some new pockets like these will now make a comeback.
I mean, so you said private insurers, just clarifying that, because a lot of, HDFC Life hit a new high 2 days ago, right? So is it the HDFC Lives and the SBI Lives, or ICICI Pru life insurers? Or are you liking the general insurers like ICICI Lombard, for example?
See, I think a mix of both. ICICI Lombard, I think, is an absolute winner for me. I think if you have to play the next 3 to 5 years, insurance as a theme is likely to do well, and I'm more tilted towards the private insurers because I believe over the next 3 to 5 years, they're going to gain a lot more market share from the PSU players. I mean, that's how I see things. So that's the reason I would bet on the private insurers, because I think that's a mega story.
Gautam, so good talking to you. Thank you so much for taking the time out, and have a good run.
Thank you. Thanks, Neeraj. Pleasure.
The pleasure is ours. And that's Gautam Shah of Goldilocks. Well, you got a lot of insights on a lot of things, including a multi-year theme in insurance is what Gautam Shah believes is in place.